Hey YouTube, Siam here. So this is a bit of a clarification video in response to one of the comments on one of the videos. So on the 8th of August I made this video, which is the crypto investing framework you need before buying crypto. So if we just click on that,
the short-term holders dropping, you see.
So this was me basically talking about the exact crypto investing framework that I use, and I made a little on my Facebook page. I made a little infographic, well, my web dev did, and long story short, I mean, just watch that video, it goes through the whole thing, but it's how I basically weigh up a certain move and you know, put the probabilities and confidence levels before everything. So yeah, in summary, explore both sides of the coin, apply weights and probabilities, weigh up the seesaw, act accordingly, be willing to pivot in a heartbeat if you're incorrect, and constantly evaluate the mental models / lens from which you perceive the world and markets through. So what this comment said was, lol, you said a week ago or so for free on YouTube you were waiting for further falling, but then jumped back in and only told your Telegram group, which you need to pay for. Yeah, nice one, Siam. I guess this is why you should never listen to randomers on the internet and always do your own research. So I sort of understand where he's coming from, but the thing is, I want to talk about this little infographic that we made, and so I'll read it out because it really will help you. So 3 tips to be aware of before copying an investor. 1. Context is everything. When following a trader or investor, you need to fully understand the person's thought processes and methods. Without this understanding, you'll never know how to wean yourself off or understand the trades that you're placing. 2. Good traders focus on R multiple, not win rate. So a good trader may only be 35 to 50% accurate, but end up net positive due to high R multiple wins. As a result, it causes a more volatile profit equity curve than a method with a high hit rate. 3. Fully commit or don't copy. Assuming you're following a profitable trader with a 40% win rate. If you loosely copy them, you may copy a couple of winners, but then after 2 losing trades, you may think, Siam is an absolute idiot. I think I'll give it a rest. You then may miss out on 2 stonking trades and then think, balls, will start following him again, only for the next couple of trades to lose. This happens all of the time. So the trader is profitable, but because you've been selective with what you copy or what you don't copy, you've ended up with a worse win rate and negative profit. So in summary, either fully copy someone or don't. And if you do copy them, you need to have unrestricted access to them, okay? Either way, continue to learn the context and methodology. Yeah, so the key thing here is that if you're going to copy someone, you need unrestricted access to them. Don't copy a random YouTuber because you will never, that you don't have and you're not in their full ecosystem, because you'll never see all of the what's actually going on behind the scenes. So with my community, my realistic trader community, I have everything in a Telegram group. So literally every single thing I do is posted in here, so it doesn't get buried in the Facebook group, because we have a social Facebook group as well. But every single thing I put in here in real time, regardless of the time of the night. Sometimes it's it's quite late, and that way you don't miss anything. And so, for example, when we were talking about the Bitcoin stuff, I made a video again a while back. This actually was on my YouTube channel, of how I said that momentum traders, which is what a lot of hedge funds would do. So a lot of hedge funds will be looking for certain levels. So I'm going to put it here, rough ballpark. So that a lot of big money will be looking at this area, sort of between 30 to 20k, and be thinking, hell yeah. So that that will be a really great place to get your fill. And there are, I know, a lot of hedge funds that were looking for sort of sub 29, 30k to really get their fill. This sort of area between 40 and 30 is a bit of a doldrum area, because it's chop. It's like a meh sort of area, and a lot of people were completely ignoring Bitcoin, as in I'm talking about smart money here, not average retail money chasers. This was a bit of a meh area, because return on time invested is also a key thing that they look at, and you don't want to be buying in the chop. So yeah, some were buying during these dips, but some were just waiting for it to break above 40k, and then this is where the momentum traders and funds start coming in. It's like, now get in, and then they really wouldn't be buying sort of in the upper stages of this. So one of the things that I was looking for was, I thought that, looking at on-chain analysis, on-chain was actually quite bearish back around here, around 30k. So admittedly, I thought, though, knowing how the smart money moves, we'd have a bit of a move down to sort of 26,800, and it didn't happen. And obviously, this falling compression played out, and I wasn't entirely confident that this falling compression would fully play out because of the on-chain analysis. On-chain said it was looking pretty weak, but we then got a correction. It then shot up, it spiked up to 40, back down to 37. I thought, I'm waiting for a Kobo, a kiss off and bugger off, and that Kobo never happened. So it hit 40 again. And it was around 39,040 that I got back in. Now, bear in mind, context is everything here. I was only out of a few trades. So I was only out of Cardano, Polkadot, Chainlink, and a few others. Most of my portfolio was already in. It had already got back in during this section here. Again, you would have seen if you're part of the community. But then the remaining ones, once I saw this low test here, it was like game over. This is definitely going to go up. And look what's happened. We've had a whole bunch of low tests, which is signaling further movement. In fact, ADA is one of my biggest positions. I didn't get in the best time, but I'll just show you when I got in, because I would have put it here. Here we go. Just got back. So this is on, what date was this? 3rd of August. Just got back in ADA at 120.29. And what did ADA do? So by the way, I got out of ADA as it was going down, and I got back in 129 here. So once it had basically broken out of this compression, and it's been a great trade. And look at all these others. Dot 1621. Let's have a look at Dot. I got some of Dot at 1621 around here, and some again a bit higher, admittedly. Link $20. Where's Link? L. Yeah, got in a bit late, but as it was breaking out of that compression, I was like, okay, game over. So yeah, so going back to this comment here, there's a lot of, so again, yeah, you can listen to randomers, but you need to fully understand their ecosystem and the way that they, or their thought processes and methods. And yeah, always do your own research. So but yeah, you can't complain. Like, I put out a lot of content, on free content on YouTube. You can't complain that I have a private group where I've released a lot of intimate stuff here as well. For example, I've just released, if I won't play it, but we've got like another sort of crypto punt here. But yeah, anyway, hope that makes sense. See you soon. Toodles.